Today's market call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. With Fidelity Trader Plus, you can customize your preferred tools and charts and tap into crucial data across all your devices. So I can save an order on my desktop at home, get a mobile alert here at the studio, and complete the trade in the Fidelity app without starting over. Try it for yourself at fidelity.com/Trader Plus. Home Skillets, Monday, the 17th of November. It's 11 a.m. on the East Coast. That's Dan Nathan. I am Guy Adami, soon to be joined by the great Carter Worth. Busy couple weeks here at Risk Reversal Media. We were in Austin, Texas last week for the Apex Ascend Conference. That was a lot of fun. And we're actually headed to Florida this evening for the CME Conference, which will also be a lot of fun. Hello,
Dan.
Yeah,
we love that one. I don't know if you've been to Austin in a long time, Guy.
I was just there last week.
Prior to being there last week.
Sorry.
That's a great town. I know all the tech bros. They've been moving there from, California and the like. I saw Brad Gerstner. Somebody sent me a tweet that, he wants to move there now from California. Everyone's all pissed about the way California is being managed. The one thing that's interesting, and this goes to affordability, you go in there and all the bros leave Palo Alto and the Bay Area, and that got crazy, unaffordable. And now they're going to Austin. It's going to do that. They did it to Miami during the pandemic, right? New York City, obviously a disaster. So wherever all this innovation goes, it makes it really hard for the locals there. That just is what it is. I'm just saying that. That's been
that is, yes. And that's not what we're tasked to talk about. But if you think about it, wealth, obviously everybody aspires to certain things, right? And with that then becomes this great displacement. And, you can't then subsequently, if you work in these cities, for a lot of people, it's impossible to live in these cities. And then you wind up commuting anywhere from an hour to 2 hours from places that historically are not commuting areas. And there you go. But that, again, that's just me pontificating.
No, I mean, listen, it ties into one of these. I mean, every day. I mean, Torsten Slok this morning, Guy, had something about a consumer K-shaped. I feel like he was talking about it in a different way a few weeks ago, but he was talking about basically consumer discretionary outperforming consumer staples, discretionary, a higher end consumer, staples, you know what I mean? A lower end consumer. We've been talking about this kind of pulling back, trading down. There's no shortage of things that we've heard from the quick serve and fast food, all those sorts of folks from Walmart and the like here, even Costco. Maybe they could throw up a Costco for a second. Oh, there you go. You guys, I know we hit this a lot. If you're not following Torsten, you're not going to the Daily Spark. You should be. Just every day is short, just like that. Just gives you something to think about. But Guy, is Costco emblematic of what we're talking about here?
I think so. And again, if you look at Costco, which we are, this stock made its all-time high in February. It's now November. So this has now been an underperformer. And you can draw a trend line down and you can see from that all-time high, you can do the second point sort of mid-August or so. And you can see this downtrend that we've been in. We're not at support yet, but we're getting precariously close, sort of that $900 level. If you look, I mean, that's pretty critical support. And you can see the downtrend line. There's your horizontal line. So let's see if and when, if we break, what happens. But what does this speak to? And, again, we've been below the 200-day moving average in this stock now for the better part of, you can go back all the way to sort of September. If you really want to go back outside that little blip, I mean, you go back to sort of July, August, and we've been below the 200 days. So that's something to watch as well. And yeah, again, I hear Brian Moynihan, and I don't think he's being opaque or obtuse or any of those things, but that's a word from, if you recall the movie Shawshank.
That got him in a lot of trouble, Andy Dufresne. Just that one word.
He had to go to solitary for that.
Well, don't they call it the hold? Didn't they call it?
I remember when I was in the slam, we called it solitary.
When you were in the shit.
Anyhow, it speaks to people. They're strapped. I mean, and I sent something last night in the chat talking about all the different delinquency rates, and that's out there as well. So yes, the consumer is spending. They've been fighting inflation with credit. So there you go, Dan.
Yeah. You mentioned him before. Carter Worth. We are lucky to have him join us once a week. He is waiting in the wings. He did a lot of work. If you are now, there he is,
Right.
Carter Braxton Worth.
What's up, guys?
I've never
Carter,
seen that before.
over the weekend, you did a lot of work, because on Sunday from worthcharting.com, and people, if you want this service, it is amazing. And you know this, and I'm not being hyperbolic here. It's one of my first reads every day. And, you know, we talk about fundamentals. You call them fundamentals. We talk about technicals. To me, technicals have been a really important input, and having somebody like Carter who really knows what the hell they're doing and has been doing it for decades is really important to me. Sometimes it could be where I start with an idea, just looking at something that's oversold or overbought, or, you know, like some of the patterns that Carter talks about. But over the weekend, you had a really good survey. It was kind of like, you know, looking out in a couple of different, or a few different scenarios for the markets. You also did your nightly overview that you do late at night, and that's excellent. But it was the Bitcoin one that really caught our attention. So we want to hit Bitcoin, and then we also got to hit a single stock name that Guy and I have been talking about all morning. Let's talk about the Bitcoin, because, you know, a lot of the articles I read over the weekend, it's kind of bumping through, you know, past, you know, the stock market. Like, you know, you normally it's like plan B, or it's number B. You know what I mean? This is one of the ones that I saw more articles about than where the stock market was in general over the weekend. So talk to us a little bit, like, what grabbed your attention about Bitcoin?
Well, we know it's been weak, right? And it's been fairly persistent for about 6-7 weeks, down some 26-27%. So that is in and of itself an event. But the weakness leaves Bitcoin down in a major trend line, both one that's been in effect for 2-3 years and one that's been in effect for 10. And so we thought we'd comment on it and put out a note. And so here is a relatively short-term chart. So you're talking about 2022 to 2025, and Bitcoin has down to the penny, right, to this trend line. Now, this trend line is not just in effect for this time period. Look at the next and longer term chart. Here's a 10-year Bitcoin off the report. And now let's put in that same line. It's the same line. The same line that is in effect since 2022 is in effect since 2015. And we've come down to that line and responded to it, to the penny. And you'll see that in the next iteration reliably. So we thought we'd play for a bounce. Now, what's unknowable is, one, do you get a bounce or not? It's a little bit of strength last night at the time that some of that's been given back. Two, how much of a bounce? And these are the kind of questions you get. I don't know. Should you play for a 3% bounce? It's pretty good for one day's work. 13% bounce, maybe it lasts 6-7 days. Maybe it's a bounce that gets on and goes to new highs, as the big bulls are calling for. But what if it's a 1% bounce and then all of a sudden undercuts the line? What to do? Undercuts the line by 2%. Well, in principle, just react to the ball. So if and as it starts to break trend, I would want to be short or flip it around if you're long. But here and now on this approach to this important trend line, we're buyers for a bounce.
How important is the trend line? You know, this is now a decade long, as I've said, and you can either say yes or no, Guy, you're wrong. The longer the duration of the trend, the more important it is. So, you know, here we are at 10. Well, I mean, in this case, it's 3 years, but you can go longer term and see. I mean, it's a much longer term uptrend that we've been in that, you know, we're right at important levels here. This is, again, you know, I'm going back from 2015, which is basically when people started talking about Bitcoin in earnest.
I mean, yeah, very important, right? And you know, big bases have big implications. If a stock bottoms for a multi-year period and comes to life just as a big top. And so duration, there are minor formations, intermediate formations, and major formations. So only 3 time frames there are, right? Minor, intermediate, major. But the important thing here also is that happily and permanently, right there, the notion, the misguided and inaccurate belief that this has something to do with gold, right? It was the new gold. Its correlation with gold is 0. It correlates with risk assets, AI, it correlates with beta, it correlates with projected earnings and companies that don't make any earnings. It's a risk asset. It's a gambling chip, independent of one's long-term view of fiat currency and you know, the digitalization of the monetary system. it has, and there was, notice you can do an AI search for this, like the number of times the word obtuse appears or not, or the use of the first name Helen or not, popular in the 50s, less popular now. The whole notion that gold and Bitcoin were related, it's disappeared because it doesn't trade like that. Finally and happily, that crowd has been put in a room and the doors locked.
Yeah, I've never adhered to that either. I'm glad it's finally coming to light for most people. We have a question, I believe, from Lee J, Dan, and this is a good one. And I believe he's calling us rapscallions, which is, I believe, a derivation of or it derived from French, meaning sort of mischievous person or a rascal. Throw that question up, and it's about MicroStrategy. And what are your thoughts here? And I think we've done a decent job in terms of MicroStrategy, sort of cautioning people that this is dangerous stock right now, and here we are at 52-week lows. And more importantly, Dan, I mean, just look at this thing from peak to trough. I mean, this was an all-time high of, I think, 540 and change. And I think it did that earlier this year, if I'm not mistaken. And think about the dramatic decline. Now, that's against a backdrop, by the way, of a broader market that's done extraordinarily well. And until recently, Bitcoin was trading at all-time highs. So with this move in Bitcoin, which is maybe 25% move-ish from peak to trough, I mean, look at what we're seeing in the underlying asset known as strategy, Dan Nathan.
Yeah. This is one, it's right at that level, that high from early 2024. And, when it sliced through that 150-day there, I mean, you would have thought there was a level maybe like, $50 higher where we bottomed out in early 2025. It just kind of went right through there. And this is one of the ones, and Carter, I'd love to get your take, is like, this is not an equity. Right? Like, let's be clear about this. I mean, he owns 50-some billion dollars of Bitcoin. And at one point earlier this year, or maybe late last year, it was trading 2x the value of that. Right. And it speaks to a little bit of just the insanity that was going on, or the euphoria about this risk asset, because you could have just gone to Coinbase or Fidelity or whatever you want and bought Bitcoin, not at a premium to the holder within this equity. So
is it a premium now? I mean, I just don't
know. It's actually gone to a discount,
a
slight discount. So, but go back to that 5-year. I mean, to Guy's point, it's just like, at no point was this interesting to Guy. You know what I mean? I'm not that close to the situation, but you've been saying this now from 450, and at some point it'll get overdone, or it will just be one of the biggest unwinds, or it'll be something like, go to Bitcoin for a second here, because Carter, the charts that you were showing, before we had these 30% drawdowns from highs, go back to that double top over there, that into that FTX one, that was 77%.
Sure, it's had 90% drawdowns in the beginning, going back. It's
so, which I think your advice is that if it starts breaking that trend, you want to be careful. The other thing is, let's pull up this tweet. Someone sent this to me. This is Saylor, the CEO of this company, who's basically gotten a couple hundred other companies to get into this treasury trade where they sell securities of their equity or sell debt, debt or equity, and then they buy Bitcoin or ETH or something like that. Go to this tweet for a second. I mean, he's talked about this. You got to be able to weather these storms. He puts this out on Friday when the thing's selling off. Maybe our team can bring it up for a second here. This sort of memes, I think we're behind him, Guy. Like, you know what I mean? The idea of memeing things higher just seems so 2022 in my opinion, or 2021, excuse me.
Well, I mean, we're not at dangerous levels yet, although obviously the stock price strategy would suggest otherwise. But my concern, and there's the tweet, my concern all along has been, so I've said the average price is about 74,000 Bitcoin. I was off by $433. Bitcoin is currently trading 94,000. Carter talks about if and when we were to start to approach that average price level, things get problematic. And I'm not a mathematician, but the market's going to start to test them. And maybe the market is testing strategy now in some way, shape, or form. But if we can see continued weakness in the underlying asset of Bitcoin, I think some really strange things are going to happen, not only to strategy, the stock, but maybe to the market as well. It could be that important.
Yeah. and you've been mentioning that. I mean, going back to the FTX situation, this was a risk asset that was half the value. Look at that. That's the one I was talking about. So he's saying HODL, you see the Titanic, going under, and there's him, and he's on.
Was he on the ship? I didn't realize he was.
Wait, hold on. What is it? This is the person behind the sailor on a raft on a Titanic burning sinking ship.
Yeah. So there's a couple things you say.
What's the message? That message is that I'm sorry about that ride, but I'm safe. Good luck to you.
Well, there's a lot of stuff going on.
I don't get it. Who would send that out?
Well, he's saying HODL. That's what the kids say, to hold on as the thing's going down. And he's offering you a life raft for all this stuff that's happening. Or you could look at it the other way. To your point, Carter, the whole thing's blowing up. Okay. But your point, Guy, about 2021 into 22, I mean, who the hell can weather a 77% drawdown? You know what I mean? Like, and it was what they call crypto winter. And so each one of these things, each one of these moves higher, consolidations. There was the move into ETFs, consolidated series of lower highs, lower lows. Then you got the election result, and then it rallied into that for the idea that there was going to be a very pro crypto agenda. Then it sold off, but part of this whole thing has also been these treasury strategies. Right now, there's like, who's the incremental buyer, A, and B, our friend, Tom Lee at Fundstrat, I think he was on TV last week saying that this thing could go to 150,000 by the year end. So when you have those sorts of proclamations, and Tom's been a bull the whole time, I don't know, it causes people a little bit to question what's going on there.
I think the peak is what, in July, if we pull up MSCR, isn't that
down about 30? Oh, the MicroStrategy.
Yeah. The one is that July? Oh no. Well, not the spike high, but this high from which the recent selling. I mean, that Bitmine immersion thing, I think, is down even more, or a lot more. The BMNR.
Well, the thing, and Guy, maybe you can speak to this. The thing with these like brand new, they were basically SPACs, right? That were listed vehicles, and then they raised the capital, and then they're going to. So why would anyone need to do that? And that spike higher. So Tom Lee joined that. I think he became the chairman, if you want to go back to that. And that's why, that equity, I guess it's an equity, did what it did. But think about that. I mean, any person who bought it after that one-day announcement, they're losing money.
Yeah. No, listen, again, I don't think any of us are suggesting that Bitcoin is the broader market. My point is, with all these things intertwined, Bitcoin has become sort of this risk asset that I believe really mirrors what's going on in the Nasdaq. And if we were to break Carter's uptrend line, which we're right at now, and listen, history suggests we're going to hold and bounce. And I think Carter saying playing for a bounce makes sense, and I would agree with him. But if in fact we do break, then what starts to happen to other things? What happens to other risk assets? And what happens specifically to the Nasdaq? And I think if you're talking about correlation, Dan, forget about Bitcoin and gold, as Carter pointed out. Let's talk about Bitcoin and the Nasdaq, which I think is really the important one.
Yeah, and Carter, maybe we can pull up the QQQ for a second. And this thing was up nearly 1% overnight, right? We had this scenario last week and the week before. A lot of that bubble talk, went from people saying there's no bubble, that's ridiculous, reload every time, to people started questioning valuations and and getting nervous about Nvidia. You see that 150-day, it's moving higher, nearly 560. Here we are at 605. Nvidia, is it the key to what happens in the Nasdaq 100 over the next month and a half?
Well, the interesting thing is, if you look at the implied move and the average move over the past 40 quarters, it's about 6-7%. Were it to go up by that amount, it still wouldn't be back to its high of just 2 weeks ago.
Yeah, and by the way, really quickly, so 7.5% implied move. How do we figure that out? We can take the at the money straddle right here. So that's the call premium, the put premium in the weekly, expiration. So each one of them at that 187 strike, we're about $7. So $14 combined. So to Carter's point, you would need a move up to $14. If you bought the straddle, if you bought that 7.5% move, that gets you to 200, which is still below that prior high. And then on the downside, you can do the math from it's like 173 or something like that, still above that sort of like low that we had from September, but just back of the envelope. That's one way you can figure out implied moves. It's just helpful. And Carter's point about 40 quarters, it's below that sort of move. The days of these massive beat and raises and the stock moving that way are probably behind us, because now it's a $4.5 trillion market cap company, guy. But what are they going to say? DTC DC, remember when this was like, I think 2.5 weeks ago when Jensen was giving the speech, they basically guided up already. So that's in the stock.
Listen, my view on this. It's the magnitudes in terms of percentage of the beats and raises that are getting smaller. The numbers are absolutely larger. Yes, the magnitudes of the beat on the percentage terms are much, much smaller. Now, people say, well, look at the absolute numbers. You're missing the point. No, I'm not, because the stock market is rewarding those absolute numbers in terms of obviously market cap and in terms of some of the valuation metrics. And before we let Carter go, as important as all that's going to be on the 19th, the one metric that I will look at is going to be gross margin, and to the extent they give guidance for gross margins, because therein lies the entire crux of this story. If margins start to deteriorate, Dan, I think you and I both know what happens. They rarely start to reaccelerate up back to the upside.
Yeah. All right. Real quickly, let's look at Google, because obviously Google, a big customer of Nvidia, but Google also makes a competing chip, a TPU that is more specialized, and they're starting to sell them, OpenAI and stuff. So all of a sudden, Nvidia has a lot of competition, whether it's AMD that got that huge contract from OpenAI, whether it's custom silicon from Broadcom or Marvell that a lot of Nvidia's big customers are working on. But Carter, this one opened up a few percent today. It was up 5.5% at its highs. It's given a little bit of it back. The headline is that Berkshire Hathaway bought 18 million shares over the last few months or so. I look at this, and Guy and I have a trade to kind of detail, that we want to fade this sort of move, based on just the fact that, a 93-year-old guy bought 18 million shares. It's his first Mag 7 purchase. His first Mag 7 purchase. I just want to be clear about that.
No, he had Apple, right? Or that doesn't count.
Yeah, but he sold that a year and a half.
Yeah,
you know what I mean? So generally when you see a move like this, and let's just talk about Berkshire buying it. Like, what is your inclination? And this thing is basically right back at an all-time high.
Yeah, I mean, here's the trick to this, in my opinion. One has that news and then is looking at the chart with it. That's not, it's reverse. Look at the chart as though it were not Google, and you say, oh, the stock gapped up a little bit. I wonder if maybe someone upgraded it, or they had a good conference or something. Buffett. It makes you want to see and say, and not you personally, you generically. You have to remove that. It's a non-event, I would say. Yeah. On the chart.
Right. So the idea, Guy, of fading it, how are we thinking about this?
Well, I think that's exactly right. And the way to do it is through the options market. But we have been, if you go back and watch our shows, I think we've been pretty positive on Google for quite some time. And today made an all-time high. Average volume in the stock's about 32 million shares. I don't have it in front of me. My instinct suggests we're probably there already. It's had a bit of a parabolic move I don't want to say parabolic. It's had a strong move over the last couple months. Let's put it that way. And I think a back and fill on this announcement makes a lot of sense.
All right. Well, Carter, you did some yeoman's work for us today. You did yeoman's work on worthcharting.com. You guys know where to find it. We really appreciate you being here, my man. Go check out worthcharting.com.
He's the man.
Yeah, on the other side of this, Guy, we'll get to the trade idea here in the Google.
No, we will. But timing is every. We talk about the importance of timing, and when timing is everything, you need a platform that can meet you where you are. With the all-new Fidelity Trader Plus platform, you can stay closer to the trade with seamless access to your preferred tools and charts across desktop, web, and mobile. With Fidelity Trader Plus, you can customize a chart or start a trade on your desktop setup at home and pull it up on your phone or laptop from work. It gives you access basically 24/7, Dan.
Yeah, it does. Meeting you where you are. I mean, listen, but that's the trade. I mean, you just started out this show. We were in Austin last week. we're in, Florida this week. You're on the road, you're on the run, you're this or that, whatever. You got to have trading tools that, suit your lifestyle here. So that's some great stuff over there. Let's pull up my trade in the, or my chart really quickly in the alphabet. And, I look at this, and Guy, you and I were talking about it before. You see that 250-day average at 258. We had that breakout. I just want to be really clear. Google is 100% my most favored way into 2026 to play AI. And for a whole host of reasons. We'll do that on another podcast, okay? A lot of it has to do with their distribution, and they're catching up with Gemini and the like, okay? And then what they're going to be doing with Apple. All right. All that being said, that consolidation that we got, that 250-day or the 50-day guy, where do we go on this thing if we were to fade this thing and it pulls back, in your opinion?
Well, I mean, so you can look at those prior highs. So you look right at the 50-day. I mean, that's the one that's obvious to me. So on time decay, that'll come in around 260. That also coincides with some of these gap higher moves that we've seen over the last month and a half. So that, to me, is sort of the ultimate, the ultimate sort of destination. Then if things get dicey, we can talk about a potential gap fill from the levels we saw in September, but let's not get ahead of ourselves.
Yeah. I want to do something here that I think makes a lot of sense. And, we have a trade idea, and actually we have the 225.30. We have the strikes running this. This is my bad here, but I'll just talk through it a little bit. The idea of doing a butterfly. So I looked at a put spread guy that gets you back towards that kind of 260 level or so, buying the 285 put in December and selling, let's say, the 255. And we can just pull this up really quickly here, because if you were to buy the 285 when the stock was about 290 and it's kind of moved lower here a little bit, it would have cost you $9.50, right? So if we're looking down to the oh no, we have it right. So looking down to that 255 level that we talked about, if you were just to kind of sell one of those at $2, so you'd pay $9.50 for the 285 and then sell at $2, it costs you $7.50. $7.50 to make 22.5, 3 to 1. I didn't love that, right? But the idea of basically selling two, okay, of those 255s, that's $7.50 less $4. That's $5.50. But because of the margin situation of selling two against owning one, you look down $30. Okay. So 285 to 255 was 30. 255 to 225 is 30. And you buy that 225 put. By buying that for 50 cents, you basically reduce that margin situation together. Now, if you paid $6 for this put butterfly, okay, you could only lose $6. The break even is at 279. Okay, it profits the most on December expiration at 255. So you basically have $30 wide less the $6. Okay, you can do that math. It's $24. So I like the risk reward there. Now, to the downside, let's say it shoots through that 255 to the downside. Okay, you would take that 225 put, add the $6 of premium, breaks even. Okay, that's $231. So you basically can make $24 between $279 and $231 with a max gain of $24. Okay, about 10% at 255. So this sounds like a complicated strategy, but it's actually really not. And when you're pricing up a trade idea like this, you do it right in the system and you can test the different strikes, right? But you want to make sure that if you're doing one, selling two, buying one, that's a butterfly. Obviously, you can do call spreads like this too, or call butterflies. But Guy, do you like the levels here?
The levels are exactly right. Throw up our prior chart, and you can see exactly what we're looking at. I mean, the 50-day moving average. There you go. That's basically that first level. And then we talked about the potential if we were to get down to the gap fill, and the gap fill brings you down to about 225. So the levels all make a lot of sense. They might seem like a bit of a pipe dream here, but things move pretty fast in today's world. So you're getting the potential for a blow off top today in Google on the back of the news. Big volume in the stock today. The broader market tape looks a little squishy, so at some point that's going to have an impact. The entire structure makes sense to me.
Yeah, and again, stress test these things. Take a look, see where the see where the break evens are, that sort of thing. Guy, you and I, by the way, I think you did like a little Ferris Bueller Life moves pretty fast.
Yeah.
Remember this one
Love
in the
that.
very beginning? If you don't stop and look around once in a while, you could miss it. I love
You're
that.
gonna miss it.
That whole monologue in the beginning of the movie is just
Genius. Broderick. I mean, the guy's he's brilliant. He really is a smart guy. You could tell that he's cerebral.
By the way, he was ripping it back in the mid 80s. It was remember he did War Games. Then he did yeah, he crushed it. He crushed it. And then into the Ferris Bueller's. He was probably one of the take it to the bank actors back there in the mid 80s.
And he did a lot of Broadway work. Yeah, good for him.
Yeah. You and I have
married to Sarah Jessica Parker, who's a big fan of the show.
By the way, yeah, she might be. All right, you and I got to hop. It's 12:30. We got a call. We appreciate everyone being here. We'll be back tomorrow, 11 a.m. See you later. Thanks, everyone.
This episode of Market Call is presented by Fidelity Investments and their all-new advanced trading platform, Fidelity Trader Plus. Try it at fidelity.com/Trader Plus. Fidelity Investments and Market Call are not affiliated. Views, opinions, products, services, and strategies discussed are not endorsed or promoted by Fidelity Investments. Fidelity Brokerage Services, LLC, member NYSE, SIPC.